Good morning, good afternoon, good evening, traders, and welcome to the 1944th edition of Short-Term Trading Live with Oscar. Good evening, traders. Before we get started, you must know that trading is very risky. Trading anything, stocks, commodities, options, you name it, especially if you're short these things, can be extremely dangerous. You could lose more than you had planned on losing, much more, divorce, the whole 9 yards, have to give the car back. So be careful. Make sure you know the risks behind this game and never, ever trade without stops. Now that we've gotten that out of the way, for trading on, what's tomorrow? Friday, right, Anna?
Yep,
Friday, May 31st, 2019. So what we've got going on here is quite interesting, and you've seen this chart before, but let me illustrate. This chart I've shown you in many videos, and basically what it shows you is this. First of all, I call this my chart masterpiece. It tells the story. I think this picture says it all. I brought this out before your eyes when we were up here when none of the stuff in this red box existed. And we were up here and I said, well, that's another double top. Always sell double tops. Remember those videos, one after the next? Well, the interesting part about this double top here is it happened to be the same event that created this top over here. In Jan of 2018, we heard about the first round of tariffs against China. Trump announced them, and we dropped 3,300 points. Bam, it went straight down. That many points. Then we recovered. Let me use this little circle. We recovered after a while, got back to what's now called a double top, right? Top one, top two, and it drops 2,500 points, proceeds to rally, and then drops much further. I didn't calculate that for you. I don't want to scare anybody, but the initial drop, boom, was 2,500 points. So we had our top, makes a double top, drops 2,500 points. From there, we rally up. Well, after we rallied and dumped it and made our lows, we rally up. We hit that exact same double topping area. And that's when I started to talk about something's amiss, right? We've got a double top. We've got to respect double tops. And all the videos about double tops came out, and look what's happened since. Now, since we called the double top, we also called for a projection. The OMNI projection, minimum is 23,600. The drop started at 26,689, or right up here. And OMNI says that it will drop this far. See that red bar inside of here? It's supposed to drop at least this far, which puts us down 3,050 points from the high of 23.6. I'm not saying this is a bottom. I am telling you this is a target, okay? So don't forget, this is a target, not a bottom. I don't know when the bottom's coming. Maybe this will be it. I don't know. So just so that our words don't get mixed in any way, the target is down here from this projection, but not a bottom call. We'll see what happens if and when we get down there. So the question is, do we have another 1,299 points to go to reach the first OMNI target of being down 3,050? If you do the math, of course. We started at 23,600. If we drop to 3,050 points, we have to drop all the way to here. And that drop is another 1,200 points to go, kids. So I don't know if we're getting it all, but we are certainly on the move, right? The repricing has begun for the second round of China tariffs. Right when it was announced, boom, 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 we started to go down just like we did here. So it's kind of the writings on the wall. We're going to go make this projection at least, and maybe another one, but we will make this one, or should. And that's what we're expecting over the long term. Well, long term, I should call it the intermediate term, here over the next couple of weeks. We expect to get down here. Then if you go look at the short term, you've got Russell. If you recall, we had this bear flag. I pointed it out to everyone. I said, ugly bear flag, and break we did, right down from the bear flag. Well, since then, it's grown into this bearish channel. And you're only in the middle of the channel. You got some downside to get to the bottom of it. Russell looks ugly. We're below the 50 and 200 ball moving averages. These two create the golden cross. They also create what I like to dub the death cross. If they cross again over here, they haven't. Don't get nervous. But this was the golden cross. It didn't last very long, but we had one. And now they're just sort of hovering around one another, the 50 and the 200. So keep your eyes on that. But the important thing is the flag worked well. Now we're in a bearish channel. The channel's working well, and we expect the downside tomorrow. Now, in all honesty, the Omni turned out to be neutral. Let me just type this for you. The Omni was neutral in 4 out of 5 of our favorite indices. So 4 out of 5 of the indices I will use each day to gauge whether or not we're going up or down. 4 out of 5 Omnis were neutral, but I put out a sell recommendation in the Russell anyway because the Omni's been bearish, 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 and just because it went neutral doesn't make it bullish. We're in a bearish segment, a readjustment for the China tariffs and price. A neutral constitutes a continue sell the rally signal to me. So we've got a trade set up to sell Russell if we get lucky and get filled, but we do actually have a neutral Omni in 4 out of 5 indices. But let's move along now. Now I'm going to be a little quicker. I want to show you a few things happening. We go right out to bonds. Let's roll right out to the 30-year treasuries. This was a continuation pattern. As we discussed in many videos prior to this one, it wouldn't be a topping pattern. Rates would drop further. How do rates drop? When the price of a 30-year bond goes higher, interest rates go lower. This is interest rates going lower. Then they're going higher. Then they're going lower. Now they're going much lower. So that's how it sort of works. Interest rates go down when the bonds go up. Bonds have just exploded, and this is the same as the Fed lowering interest rates. This is QE, kids. You're watching it before your eyes. So bonds are moving higher, which at some point will stop or put a bottom under our stock market. But I don't know if that's coming yet. So that's your bonds. Look at the 10-year notes. 10-year notes, you've got the same thing. Do not fall in love with the downside of the stock market. Why? Because lowering rates is a stimulus, whether the government lowers rates or traders push bonds higher, which lower rates, either or is a stimulus. This will have the same effect as lowering rates. It's QE, kids. This is QE right here. Quantitative easing. So that's the same thing as the government easing. As the bonds and 10-year notes rally, the rate starts to drop. So we're getting what the Fed would do if the Fed wasn't lowering rates right now. This is the same thing the Fed would be doing to stop a stock market from going down. One of the things the Fed would do. So don't get nervous. We're going to have a down segment. We know that in the stock market. But things like this tell us it won't last for too long. A couple of stocks have come to mind. I wanted to show those to you very quickly. First one is a car I almost foolishly traded in my car for and bought yesterday, but realized if the stock looks like this, if every time we pull up a Tesla chart, I say the same thing. I don't like this chart at all. I say this every time we look at it. This has been going on for months now. I've been talking about this being an ugly chart for months and months now. So I think that it's just going to continue lower. Now what you're looking at here is basically a channel, where we've stayed inside that channel almost exclusively, except for a drop here and the drop here. But those drops didn't last long. If you want to count the days with me, we went under the channel, back up to it, 4 days. On day 4, we were back in the channel. Day 5, we traded some in the channel, so we're back in the channel. So 4 days only. And we went up, and we came back down, and we got under the channel for 2 days only. On day 3, we're back in. So really, 3-4 days is the most you'll get underneath this channel, the blue one here. So I put this here because it's the same parallel channel, just extended out to the bottom of this. And once again, if you look here, you were only outside of this blue channel, top to bottom. You were only out for a couple of days. You went right back up. But in this instance, you're out for a while now and building an F flag, if you will, an Oscarism known as the F flag. Quickly, I'll just draw it. It's building right here. Let's make some solid lines out of this so it makes sense to you. So this is what I call one of my Oscarisms known as an F flag. Well, the flagpole is here. The flag basically is here. Not perfect because I'm being very quick with this, but if I wanted to, illustrate very quickly, this is what our flag would look like. Let's go blue so everything's consistent. So this is an Oscarism known as the F flag. The market seems to be in that F flag right now. I just put this there just to see if somehow it gains a little support down here. But that's not what I'm seeing. I do not like this Tesla chart. The car, I think, is fantastic. I really enjoyed driving it. I think the inventor of the car is just as fantastic as his car, Mr. Musk. And I love what's going on in SpaceX, but I'll tell you right now, I cannot stand this chart. This looks like a company going out of business. This looks like a chart that has activist traders short like crazy, and they will not let up. In my opinion, that's Tesla. Again, I love the car. I love the company. I love the car, and I love the guy who invented it. I cannot stand this company. Or, well, let me not say the company, because going to test drive a Tesla and almost buying was a fantastic experience. I really enjoyed it. So the company's cool too. It just doesn't make any money, and traders are destroying this stock, and they will continue. I don't care, even if we have a profitable quarter, might go up a little. Tesla's got a problem. The corporate raiders, if you will, are all over this thing. So that's one of the ones I don't like. And then look at this one. Another stock, Chipotle. Chipotle, Mr. Chipotle. All right, so look at this. You are below the 50-bar moving average in a bear flag. Now, what's interesting about that is look what happens at the 50-bar moving average here, 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 here. Let's go back on a little journey. Follow me, if you will. What happens to the 50-bar moving average here? Once it gets above, it explodes. But if you go back, once it gets below, it dumps. Okay, if it gets near it, it either holds or something dramatic happens. Hold, 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 dramatic. If it breaks, it's dramatic. And just to let you see this, you think I'm not crazy, or you think I am crazy, let me prove to you I'm not. See this? You got below the 50-bar moving average, you put in a bear flag, and the crack came. Well, before we go back to the current bear flag, let's look. It holds well, holds again, just a couple of days underneath. So no matter how far back we go, the pattern just continues. I can go back forever. So around the 50, major events take place. When you get under it and build a bear flag, it usually dumps. So traders have gotten short today, CMG, and we're going to hold those shorts unless the flag blows out and doesn't work. Below the 50, rare. Bear flag, let's see what happens. You're supposed to play bear flags for the downside. So Chipotle, one of the trades that we think should pan out, bear flag downside. And then I'm just going to take you back to the commodities here and look at gold. Gold, if you're not long, get long. Gold is working its way higher just so that you don't sell the farm to get long gold. Just remember this. It almost always fails at this green line. Was red resistance, now it's green for support. Failed, failed, faked you out for 4 days, then failed. So keep that fake out in mind. But we are now above this line and getting above the 50-bar moving average, and OMNI likes, even though it's sort of neutral gold, it's neutral bullish gold, and I would be a buyer of dips in gold, just like I'm a seller of rallies in the Russell 2000. That's my presentation for this evening, traders. Thank you so much for paying attention. YouTube fans, thank you so much for tuning in. Please subscribe. Make sure you subscribe to these videos. Join us in our free trading room at livewithoscar.com. And remember, keep your emotions out of trading. One of the best things, in my opinion, you can do to keep those emotions at bay, and believe me, I know it's not easy, but say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Come on, Anna, let's hear you, girl. Emotions are out. Rock and roll, traders. I will see you all at livewithoscar.com.